welcome. We're here today at our episode number 1, right?
Very exciting.
Before this started, it's our podcast. We were debating on the name, right? So what do we think? What did we come up with? Was it the Real Estate Happy Hour?
This is the Real Estate Happy Hour.
The Real Estate Happy Hour.
Happy to have you with us.
Yes. So I would think, in about a month, 2 or 3 more episodes, we'll overtake Joe Rogan. Easily.
And probably change the name, too.
Because everyone wants to talk about real estate,
yeah, of
mortgages
course.
And all that. Speaking about mortgages, how exciting these are. I was thinking, every year in the Vlamis family tradition, we have to go see It's a Wonderful Life at a theater. It's on 1 million times, and we saw it at a theater. And what does George Bailey do for a living?
Oh, yeah, he's a mortgage dude.
And he's a hero.
Yeah.
So are we heroes?
Yeah.
I think, right? I mean, what did you
Is that why you make your family go?
I'm a hero.
Look at me.
Your dad's in the Army. He's an attorney, a doctor. But I'm a mortgage broker. So is George Bailey, right? But what did you tell your kids growing up that you do for a living? Did they get it?
Oh, yeah. I got to start showing them that movie.
Yeah. It's
They'll look at me in a whole different light.
Yeah, I don't care. Don't show me any World War II movies or anything on the war or doctors saving lives. Go watch George Bailey and see how important we are.
We are the true heroes of this country.
All right. So that's why I think this podcast will do well. All right. So it's fitting that Barry and I are on this. We're about 25 years in the industry, right?
Yeah.
So we're coming full circle in that I started my career in 2000, and you started when?
99.
And we were at a company, and that's where we first met, at a different company back then.
Yeah.
And I thought what we would do is just talk about the history of the mortgage industry, because I do think that we came at a pivotal time when the world was changing. That's prior to wars. The Fed started cutting interest rates, and it kind of, a whole different world in the mortgage industry. And we were kind of on the cutting edge of those top producers that kind of changed the way people view business, right? I would think about
cutting edge technology-wise, too, because we would handwrite mortgage applications. Do you remember that?
Talk about an application. I mean, I can't conceive.
Handwrite. If an underwriter couldn't read what you wrote, that would be one of the conditions.
Think about because we're talking physically. Okay, this is 2000. If you had email, it was AOL.
Yeah.
There was no company email, right?
$19.95 a month.
Yeah.
Yeah.
So, I'm still paying that, I think. Yeah, I don't think I've ever canceled my AOL account. I've got a free CD disc if you want to use it to download
Good. I'm glad
stuff.
you got that.
But you're right about that. So it was handwritten loan apps in person too, right?
Yeah. Oh, yeah. We'd see every client in person. They would come to the office, or we'd go to their house.
And you could see, in the office, like, oh, someone's got an appointment. I mean, someone has a loan, right? They're looking at someone having a loan. So I remember in that office, because starting new, you had no business. And I remember watching other producers. And I remember at the time, without saying names, I remember that person, he's got about 7 or 8 closings this month. That's really, really good.
Yeah.
But then I remember doing the math, and I thought, that's not enough.
Yeah.
So that's why we had to pick up our game, right? Because that was considered really, really good at the time. I go, that's not enough.
No, it wasn't enough.
Yeah.
And we were like, not patting ourselves on the back, but we were like the new blood, the new generation that came in and kind of turned the mortgage industry around.
25 years ago, easily, right? Because you think about it, well, points, right? Everyone charged points. And I remember saying, well, why do I have to charge that point if I can make money in the back end? And they're looking at you like the lobster's growing out of your ears because you can make more money. But one thing I would say is I don't think I've ever counted how much money I made on a loan. I just want the business to keep coming in.
Yeah.
But let's go back to the old times that you just mentioned, a loan app and what it was like. Because I would get anxiety if a client had to come in, because that's how long that meeting would have to be to get their information, right? Because it's not like, all right, they didn't give it to me. It's not doing your homework. I'll get it when. When will you get it, right? Because you needed that information. So
the guy that trained me, do you remember Fred? I won't mention last names, but he's like, you should allow 2.5 hours to take a loan application.
With my attention span, that's just brutal.
I know.
But he's not wrong, right?
He was not wrong. Well, I mean, it probably took about an hour.
So I'm going to tell you how I utilized technology back then. I would go to the printer, I'd program the 1003. The 1003 is a loan application, 40 pages maybe.
Yeah.
I would print it out, highlight where they had to fill out, and send it to them.
Yeah, genius.
And send it back. So
genius.
I avoid the 2.5 hours of them coming in, right?
Yeah.
Think about that. But think how much you had to highlight, what you had to do.
I know.
And what they had to do with all that information.
We blew half our commission on highlighters back then.
Yeah, so that was my take on how to do mortgages. I remember a credit pool. Did we have access to the internet? I don't think because your computer was your own computer.
Right.
There was no.
I don't know where they got credit from. I know there's still one or two people here at A&N
Yeah.
that did loans longer than us. They did it before there were even credit reports.
Okay.
You just had to state your case. you know,
Is that
why
what you
these
did?
people are credit worthy.
Okay, so that's when you had to be a really
Yeah.
good salesperson. 'Cause
Yeah.
that's what I got nervous about, because this is my second career. How are you going to sell? You know, how,
Yeah.
how do you
Yeah.
make a case for someone?
Yeah.
How do you do that? So, an interesting market. I tell people, you know, everyone's concerned about rates. My first loan, I think, was a 30-year fix at 8.75, and no
Yeah.
one cared.
That was a
back
good
then.
rate.
That was a
Right.
good rate, right?
Yeah. Below 9.
So yeah, but when you talk about how the technology was on our side, I remember turning in a paper file, and I remember where we were at. What's her name? Nancy would just scream at me for a terrible file. What am I supposed to do with this? I go, everything else is just too much work. The other stuff will come in. It'll come in,
Yeah.
right? That's
Yeah.
how you worked back then,
Yeah,
right?
and like you said, turn in a file. It wasn't on a computer. It was a physical file.
Physical.
Sometimes we'd send emails around. Has anyone seen the Smith file? And there'd be a huge panic. Like,
Yeah.
where is that file?
'Cause it was all
It's
physical.
closings tomorrow.
Yeah. Where's the file? Where's the physical file? Interesting. So that's how we started. But like you said, when we were, the reason Barry's mentioned that we were the new new pioneers in the industry is we became top producers, recognized in the industry, you know, in the top 200 consistently since the mid 2000s, I would think. And that's the big benchmark originally is when you can get over 100 million. You know, I remember in the first few years I was 60, 50 million.
Yeah, yeah.
Then when you break that 100 million, and it kind of changed the way the industry worked, because back then, you know, I don't know what the 90s were like, but I think what changed a lot in the 2000s, you had 9/11, you had war, and what people realize is the Federal Reserve, they don't control interest rates, but they monitor them. They became more active. So when rates would drop is when we get busy. You know, rates started coming down before 9/11, but after 9/11, what happens, interest rates are very fluctuating to world news. Bad economic news means rates will drop because there's a rush to buy in bonds. And so that happened more often than not with the wars going on, that we would get really, really busy. So people like us were the whole new breed, like, okay, I don't care what I'm making. I want that deal. I want to move on to the next one. I want more, more, more. And I always remember like the conflict you would have with operations, right? It was, you know, we were just, there's your desk work. If you bother anyone, you know, you're on the naughty list or something, right? I just don't think they knew how to deal with people like us, right?
Yeah.
And it's not just Barry and I.
It wasn't just that. Like the whole industry was changing.
Right.
You know, and you mentioned the Fed. I don't think anyone knew. I mean, people knew who the Fed chief
Right.
was before Alan Greenspan, but Alan Greenspan was like a celebrity.
Celebrity,
He would
right.
go on. He would go on talk shows.
Talk shows.
You know?
That's when things changed, right?
Yeah.
And so everything the Fed did mattered.
Yeah.
And the markets would move. Like, you would be in the back of your head is, okay, like, I'll think something, remember Brexit, when the Great Britain pulled out of the European Union, whatever it was. Boom, it was turmoil. Rates went down again. Great.
Yeah.
So you didn't tell your clients wish for bad news if you want to lower rates, but that's what it was.
We became. I used to tell my shrink,
Right.
I feel bad rooting for bad news.
But that's what it was.
Because, right, Brexit, 9/11, the economy crashing.
COVID, goodness, right?
Whenever
Uncertainty.
people are out of jobs, we'd be like, you know, oh my gosh, I'm going to make more money, which is a.
And we'll get to this, the crash. Remember the
Yeah.
crash in 2007
Yeah.
that they blamed the mortgage industry? Who benefited the most from that crash
Yeah.
with rates?
The banks.
And we did, though, right?
Yeah,
'Cause
we did, of course. Well,
rates dropped, refis.
we did and we didn't. We got a lot of refis, but then with all the regulations that changed, it made it much
Yeah,
harder.
we'll get to that too, right? So that's, I remember we were like that old school, the new, not clashing with the old school, but it was one of those situations where our volume became an issue within these companies. And when I talk to other people in the industry who've been around as long as we have, it's not like we were like this new breed, but it created opportunities for people like us to come in rather than the old type of, okay, yeah, I'm doing my friends though, and I want to close 7 or 8 deals a month. You and I, we wanted to close 50 to 60
Yeah.
deals a month, and we
Yeah.
wanted to make some money, and
Yeah.
that's what kind of changed in that industry in the early days. So I remember, what did you do to get business? Because marketing. Well, let's talk marketing, because there was no marketing.
There was
department.
no marketing department. It was really up to you, right? And I remember we would just go realty offices, right? You'd bring your rate sheets, you'd bring some snacks or bagels or donuts, and that was the marketing.
And as dumb as it sounds, it worked, right?
Yeah, I hated it though.
Yeah.
I hated pounding the pavement and walking in with my donuts and my rate sheets, but it worked. Everyone would be like, "Oh, Barry's here. You know, what did you bring?" Blah blah blah. It was like Christmas morning.
But it
You
was
know,
that
every time
almost
you walk in
showing
there.
up to a fixed homecoming date that you're like, oh God, I have to
Yeah.
do this, because I don't know. I think you're similar to me. I'm people of crowd averse. Like
I'm very antisocial.
and
Yeah.
not antisocial. Like I hate people, uncomfortable, right?
Yeah.
Type of thing.
Yeah. Yeah.
So when you had to show up and okay, let me get over that hump. You're here. I'm just hi. I'm so and so. One of the worst stories I remember is driving around after church, and I was went to all these Dunkin' Donuts, get up Munchkin boxes, right? And I was crashing these open houses that realtors didn't expect me to come. It's great to crash one when there's another mortgage broker there with all his marketing material there.
Yeah.
So I had to be like, you already got a date, type of thing.
You already got a date.
So if there's anything that's cringeworthy to me, that was really cringeworthy.
Yeah. I remember after my son was born, when was he born? 1999. And my wife and I, we would just make flyers. Hey, do you need a mortgage? And was just folding them up and putting them under windshield wipers. Yeah. Can you imagine if you got that now? You'd be like, what is this crap?
It's like,
right?
or it's almost like we buy houses.
Yes.
Or we paint houses. It's the same thing.
It's the same thing.
But you did what you did, right?
You did what you did, and it worked.
It worked. Yeah. So
it's crazy that worked.
You just.
I got this flyer under my windshield. I'm going to call this guy.
And back then, what was compliance? You had your name and phone number. It didn't say your mortgage license. Didn't have anything. Because there was no one to tell you what you're supposed to do.
Right.
What is it? MLS number. What is that? I couldn't tell you what mine was back then at all.
No.
Type of thing. But that's interesting. You say that's what you did. One of the best things that I did. I got in the business in the summer of 2000 officially. I was floating around in that, and if you remember, that's when I mentioned the rates were in the high 8s, but they started coming down if you can get in the 7s, right? And so January and all that up until September 9/11. From my previous career as a trader, I realized after 9/11, rates were tanking. So I knew that the people who got a loan from January until September thought they got a great rate because it's much lower. I went and bought this database of loans from 300,000 to whatever, a million, and thousands and thousands. And like you said, I had a little kid help me sign my name. It was a written opportunity for the affluent homeowner, and it was hand signed with a card, and it sent out, and it just exploded my business.
Yeah.
Because I offered the free refinance is what it did, because the loans were big enough.
Nobody did that back then.
But that's the same thing if you flyers and cards, and that type of stuff worked. So, and then talk about your newsletters though, because Barry's known for his newsletters. It is, as long as I can remember, you were doing those. They would laugh because I remember when I started, the newsletter was like, GDP today went down this much, and who gives a rat's ass, and stuff that no one really cares about. But you took a different approach, which I copied over time. But
well, I mean, it just went back to my schooling and my ADD or whatever you want to blame it on. I just find things very boring. I remember when I started.
We're mortgage brokers. Remember how boring that was? But not anymore. George Bailey, remember? We're heroes. We're heroes.
Well, Ken, the guy I worked for, he handed me this book, Washington Mutual, GMAC, like these big, thick binders of regulations and everything. And he's like, read these and you'll understand. You'll learn the business. And I remember I took them home and they just sat there. I
I couldn't imagine. I was going to say,
because we are in one of the most boring industries in the world. Like I'd rather be in the trash recycling. I mean, this can't be more boring, right, Dean?
Right.
So we would just mix pop culture, and I think I would write these newsletters, and they'd be probably 20% mortgage related, 80% just trying to entertain people to get them to read it.
But and I'm going to give Barry credit because I started doing that after I read one of his newsletters, and I would love to read them because they were so funny. But it realized that's the only time I would get a response from clients, right? I wrote one. I don't know how I tied in growing up in 7th grade and Wonder Woman and watching the Dukes of Hazzard and why I had to watch that in the privacy of my bedroom with no one else around when I'm 13 years old. Yeah. Daisy Duke and Wonder Woman. Yeah. I just remember someone laughing, Wonder Woman, huh? Like, you're a young adolescent kid at 13, and I tied that into mortgages somehow. I don't even know how. So we were talking about marketing back in the 2000s, how you and I grew our business. I remember. What I would learn is, because I was, relatively new, just a few years in, is what are other people doing type of things. And I remember at one point subscribing to a newsletter, and it was that one-page newsletter that talked about the market and, really keeping my clients informed because they really care about the details of the mortgage industry. But like you said, you mentioned that Ken had given you all those books to read. I mean, that's like me getting a stereo. Do you read the instructions how to put the thing together? Like, who wants to read that? I'm trying to remember. And this is an admission, I can't admit it took me years to understand what an escrow refund was. Like I would just make it up to clients for such a long time. What's the difference between Fannie Mae and Freddie Mac? Well, did you know?
No. I used to tell people they're like McDonald's and Burger King.
Which is pretty accurate. When you come to it, it's pretty accurate. But I mean, the industry was, what we were good at is communication.
Yeah.
We were different than that. I remember people telling clients, like we would hear the older guys in the office, not yelling at clients, but you don't understand, and then cornering us and telling us for hours about their one loan.
Of course, yeah.
But telling us this is the way it is, I'm thinking, well, maybe I can just provide better communication,
Yeah.
and be available. Because
Yeah.
they're buying
It
a
wasn't
house.
that hard.
Yeah.
Right.
When did you buy your first place? Before you were
It was
in the
before 1994.
So me too, about a few years earlier, and you hated the process, right?
Worst.
The worst. So I think that helped us, right? 'Cause
It helped us tremendously because I always told people this is going to sound corny as hell. I never wanted one of my clients to feel like I did when I bought. It was the worst experience of my life. Not the worst, but it
whoever
was.
my mortgage person was, she was nice enough. I just remember sitting on a Saturday afternoon going through stuff.
Yeah.
And she goes, "Oh, I forgot about this fee."
Yeah.
And I just remember she burning. Okay, that's another couple thousand out of my
Yeah.
pocket. And she wasn't doing anything wrong, but everything was looking up in the books.
Yeah.
It was by hand.
Yeah.
And I couldn't even tell you what my rate was. I just said, "Can we just be done with this?" And I can be.
We were
done."
excited. We were below 9%,
Oh, were
which
you?
was, yeah.
Okay, and that's the thing. I think that's why we're getting back to the 2000s, where we were in a whole different world. We started and we took advantage of those changes. So we were talking about marketing, and I wanted to get back to that because I remember a lot of that stuff. You would see what other people were doing, and I remember as you start getting, postcards started becoming a big thing. You would see these same postcards from, maybe from a real estate company, from 10 different people. And I think you differentiated yourself, and I tried to copy off of that. Like
What was that? Didn't you have like an Elvis one? What was your Elvis?
Elvis postcard. I would do any. My favorite ones was like 2007. So think of 2007, President's Day. I tried to think of a postcard for every month. President's Day was in February, so I would put Benjamin Franklin, Mike Tyson, and Donald Trump. And the irony is Trump's president now, but back then, Ben Franklin, no one
You're
knew
like
he was
the
never
Simpsons.
president, but people who would never be president. And I put in the back, my taglines were, "Getting the president's right, challenging mortgages are simple." My concept was, if they look at it for 3 seconds before they throw it out.
Yeah,
Rather
right.
than, "Call Dean Vlamis today for that great rate," type of thing. Yeah, so.
You were a visionary.
No, I copied
I think
you.
Mike Tyson's going to, 2028, he's
Right?
going to run. He's going to
Ben
be the
Franklin
next
never
president.
made it, but Mike Tyson will be the next president. Yeah, anything can happen. So, but tell me, I want to go back to your newsletters, if you can remember any of them, like the type of thing, because how different it was, your personal life. If you can't, that's fine. We can, but if you want to move on from
I
that.
mean,
so-
I can't even remember. I remember just all pop culture.
Right.
Right.
Because you and I used to talk about that
All the time. All the time.
Yeah, I remember, because I'll share sometimes that I see the Bionic Woman or a $6 million man.
Yeah.
We'll
Yeah.
go from
The
there.
funny thing was, we would put pictures of Brad Pitt or Jennifer Aniston in these letters. Can you imagine doing that now? Like, it wouldn't get past.
No, I remember that. When I was near the end of our days at that company, I wanted to put a thing of Michael Jordan and LeBron James. Where
Yeah.
LeBron was crying and one's the GOAT. And I said, if you're really as good, and they say, you can't do that. That's, because I've used the Rolling Stones, I've used
Yeah.
Elvis and all
Yeah.
that. So that's off the record, of course. The days of marketing when you can do anything when no one was
The
watching
greatest.
us. So.
The greatest. No watchdogs.
Yeah, but that's before technology, right?
Right.
And how we worked. Because I remember you had to be in the office to get phone calls. Do you remember? Oh, I have a lunch. You come
Well, that
back.
was the worst. If you didn't want to be out of the office more than a half hour just to pick up a lunch,
Right.
Because you'd have such anxiety, and then you'd come back, and there'd be 10 messages on your
And I think
landline. Did we have landline? We did have landlines.
Landlines, right?
Yeah.
Landlines with no headsets back then. So
No.
you're like, okay, hold on, let me take this down.
I still have a pinched nerve. I still can't stand straight.
So I would like to say we took advantage of the industry back then, but because of the way companies were set up, they weren't really set up to support you.
Right.
It was like, here's a processor, let's do the best we can.
Right.
There wasn't any focus on, these guys are really bringing in some business, they
Right.
need some help, and it wasn't anyone's fault at the time,
Right.
type of thing. So I think that kind of worked against us, because I'm going to mention a name from the past. Do you remember our name, Sandy Marshall?
Yeah. Sandy was the best.
He was ahead of his time,
He
right?
was.
Like Sandy was, I'm going to introduce it, he was a Second City actor, and I met him at my
Yeah.
previous company, but he came up with this idea, we would just joke around like the three of us did, of doing videos, and you're in the videos. Remember
Yeah,
we
yeah.
did, we shot
I
about
remember the ping pong
the
one.
ping
remember?
pong video, and all we did was shoot about these videos, about the 7-minute, 8-minute videos, and it's the take on The Office. I come off as a complete doofus in the mortgage business, and Barry's in one of them. We're playing ping pong at one of them. But they were Sandy's idea, and it was just after that, he goes, we're on to something with the videos. And he wanted to do he did a podcast
Yeah,
back then. He did
yeah.
market updates. And like you said, it took me away from my phone. And when I
Yeah.
get back, I go, I can't do this
Yeah.
because I'm too busy. If I'm away from the office, people can't get a hold of me. Where, needless to say, this is 2008 or 9 when Sandy was coming
Way
with his
ahead of his
ideas,
time.
way ahead of his time, that you wish you would have hung on to something like that. But if you ever check out my website, you can see those old ones are all on there. Sandy Marshall. The best part about them is all the actors we brought in were Second City actors. So I'm the worst actor
It was,
in all those
yeah,
videos.
it was really good though.
Those are good
really
people.
professionally done.
Yeah.
And funny as hell.
So
I was gonna say, do you remember in our first On the Fly? I don't know if you remember. This was a great program
Yeah.
where the loan officer was the underwriter. So they gave us, I can't remember our rep's name, but she gave us a list. These are the 8 things you want. 2 pay stubs, a W-2, a bank statement, a signed application.
Right.
And then they'd give it to you. We'd lock the rate, and then they'd be approved.
And that's how it worked back then. So
And you wonder why this country almost went bankrupt. Right.
But they were trying to, that was an old company that doesn't exist anymore. Do you remember how many different mortgage companies, even like Washington Mutual,
Yeah,
PNC,
WAMU, yeah.
Of course, GMAC.
Countrywide, yeah.
Well, think about when we talk about technology, who has the best rates? Well, I have to wait for rates to come out. It was a stack of rate sheets
Yeah.
this thick.
Yeah.
And so we're all like, does anyone know who has the best 30-year fixed or who has the best arm? All day long, you're going and clients are calling.
We're like the
going through rate sheets.
Flintstones. I mean, compared to now.
How did we live like that in
I
this
don't
industry?
know.
Because now you want a rate, okay, we just go on online and
Yeah.
do a pricing engine.
Yeah.
So I remember that, how that changed. There was subprime. You remember there was any loan you could do. And thank goodness I never did one because I just referred them to my
Yeah.
wife because she
Yeah.
did all those.
Yeah.
But they're literally, if you remember, I want to buy a 4-unit with 5% down and I don't want to show my income.
Yeah.
And you had to shop that, and they were rate shopping because that you can get that done.
Do you remember there were a few banks that were giving out 125% the value of the home.
I
So
did
you
one of
could buy
those.
home
Yeah.
not only with no money down, but get 25% in your pocket.
It wasn't The Price is Right. You win a cash. It was like a game show. We were like game show. Price is Right. You win this. Come on up, and you get your $25,000 for buying this house.
I had this is how bad things work. I didn't do any subprime loans, but I knew a guy that did.
Okay.
And I referred him, whenever I got
Now, when you
just
say subprime, those are the people with challenging
Horrible
credit
credit or
I mean,
whatever.
there was no bottom back then.
Right.
Anything can get done.
Right. And this guy, he was bragging to me that the client signed the closing papers, Abraham Lincoln.
And they did the loan.
Which is actually genius. If you're going to trust anyone, it's going to be Lincoln, right?
Right. And they still got the loan.
Got a $500,000 loan.
Abraham Lincoln, he signed him. No one's looking. Goodness. So it got extensive. I want to talk about that because I remember when you saw those big, Fannie Mae and Freddie Mac are the government-sponsored entities that insure all these loans. They set the guidelines, and even the jumbo lenders kind of mimic them. But there was something happened in 2000. I think Countrywide kind of started. And remember, Countrywide is the demon in all this. But they were onto something. They came up with their own system. What I mean by the system is we get everything. That's when technology was taking place. We would have a loan application. We run it through an automated system. It would assess everything and say, okay, we approve this loan. Just verify the following things: their income,
Right.
asset, and such.
Right.
Countrywide, InterFirst, GMAC, Chase, all these big banks started to come up with their own systems, which was a good thing because they're basically saying, we can assess risk. We don't need Fannie Mae and Freddie Mac. And if we can assess it, there was more competition then because think
Yeah.
of how, we had to take a break here and you were talking to a client. We had to take a break. And they make plenty of money to qualify, but you're trying to fit them into this box
Yeah.
of Fannie and Mary. There's no common sense type of
Stupid.
thing. So if you don't
Right.
fit in this box, you may not be able to get a loan. They were looking at things from a different perspective, saying we can assess risk. The problem was they just kept expanding and expanding, expanding.
got greedy.
Because it was a good thing to say, we're so beholden today to the agencies that all I think they would do is drive up costs for the consumers. It's very expensive to do a loan because there's little competition. What the Countrywides, the Chases, and GMACs and WAMUs were doing is they're creating their own systems, but they went too far. Literally walk in the door and you can get a loan, right?
Isn't it amazing that, what's that movie? Is it The Big Short? Is that the
Yeah.
movie?
Yeah.
That's a great movie, like, if
It's
you
on-
watch it.
yeah.
But how many bankers went to jail?
For that, right?
Like one or two at the most? I mean, it's
like
just...
typical though, it wasn't just them. Do you remember Accept Plus was? Freddie Mac.
Yes. Yeah. Oh, yeah. Freddie Mac.
Freddie Mac. And
You
Fannie
put
Mae
a
had the same
dollar,
thing.
a dollar income, a dollar assets, and you run it through, and if it got approved,
Sign here, please.
Yeah.
But somehow they're not in trouble.
no, no,
They almost went broke.
Right.
But the banks are the evil ones type
Yeah.
of thing. So
and
that
we're
was-
the evil ones too.
Yeah.
And now we have to do all the continuing ed and the
that's really helpful.
fingerprinting.
That's really
and,
helpful, right? The continuing ed. It's almost like taking those books home and reading, and And here's the best part: why continue ed is so important. Because if you work at a federally chartered bank, say a Chase, you don't have to take continue
None.
ed.
Nothing.
What's different about their job?
Nothing.
Absolutely nothing. The key is they have better. What do you call it? political action committees. They
Yeah.
can lobby Congress better than the mortgage
Isn't that
industry.
incredible? That's
So
unbelievable.
it's just money is what it is. I'm not being critical, but think if you learn the stuff we have to take, the continuum of what it does versus the real life, and the fact that all these people who work at banks don't have to take continuing that.
Blows my mind.
It's just, so, yeah, it's the government getting involved in fixing that. So let's talk about that crash. So that was blamed by the mortgage industry, because needless to say, the industry went to an extreme. People were getting loans that shouldn't have gotten loans type of thing.
A lot of people, yeah.
Yeah. All right, so here's the interesting thing. Banks were going out of business left and right. So I need you to jump
Do you remember
in.
there was a website that listed the bank of the day that was going out of
It
business
was on a daily basis,
on
right?
a daily, dropping like flies?
I can't even remember, but as we mentioned, you had to shop for rates, how many rates, how many different banks there were, like National City. Remember them? They were a big player in the jumbo
Yeah.
market. All these different banks type of Wells Fargo was still around. But I remember that they were blamed for that and they were going out of business. But remember, we would get notifications, we are no longer doing these type of loans.
Yeah.
Like within 3 months,
Yeah.
they were all gone, right?
Do you remember too? Like you'd have people approved, closing a week later, and the bank would go out of business.
You couldn't do the
and
loan.
you'd have to scramble and find another
But
bank.
people like you and I were dying.
Dying.
Because the
You
way
take it
we worked,
personally,
we took
too.
it personally.
Yeah. Oh,
and I
yeah.
think that's why we became successful right away, because it was like, why we would clash. I remember sometimes you're at these companies and like almost resentful because we were doing so much business. Well,
Yeah.
we're going to charge you a rush fee.
Yeah.
Rush fee for what? For doing too much business?
Yeah.
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 So,
Any way they could squeeze you,
Yeah.
you know.
I don't want to rip on the Ken Dev thing. All right, so how remember the concept I want to get into, so we're on the same page, is remember within 3 months we get announcements. National's no longer doing these type of loans. And then 3 years later, the government got involved to fix a problem that fixed itself. So do you remember how that we're going into GFE and how hard, confusing it got, where the industry was cleaned up within months, right?
Yeah.
Okay.
Yeah.
So remember the crash, like you couldn't do any type of loan back then, almost, right?
Right. Went from everything to almost nothing.
20% down was minimum. There was no
Yeah.
and no jumbos. Oh, they all pulled out.
Right. Right.
And then let's talk about what happened, how that product disappeared. Do you remember that? What was happening?
Tell me, what do you mean? What?
How we would get notifications no longer, no income
Oh, yeah,
verification,
yeah.
those self-employed,
Yeah.
those loans
Yeah.
where everything was full documentation
Yeah.
and everything just disappeared within how long? 2-3 months?
Yeah. Like magic.
Magic,
right?
like that.
Like,
And then 3 years later,
well, 3 years later.
the government got involved to fix a problem that already fixed itself.
Right.
Yeah.
I remember my dad,
Yeah.
when he was working, he sold insurance.
Right.
And his biggest pet peeve was when the government would step in and do always such an overcorrection.
And it's a workaround is what it is.
Right. It's a workaround. Right.
Yeah.
Right. And it's just,
Well,
We're
what did they
still-
say? Because the big thing was they talked about was no income verification. You have to verify everything. And the
Right.
concept with those loans were if you're self-employed, there's a lot of write-offs that make sense. But again, the industry went way too far, because those were based on good credit. But then anyone could get a loan. They were gone immediately because all it takes, the banks that are still around lost billions of, lost so much money anyway.
Yeah.
They're not doing those loans. There's nothing that hurts them like that. They got involved and they said, okay, no more interest-only loans. Great, that wasn't part of the problem.
right.
Great.
Right.
And
That's
then
the overreaction.
we need more disclosures. The client needs.
Yeah.
Okay, let's talk about. Remember the old.
So you and I were just we were just talking about this before. So the good faith estimate before 2008 was the cleanest, easiest form to understand. A sixth grader could look at it and be like, okay, I get how this
one
works.
page, right.
One page. Now it's turned into a five page,
Five
3 to
pages.
5 page form. I still have a problem with it, and I'm in the industry. I had a lawyer, I had an attorney call me from a closing yesterday. There was the original good loan estimate and the
estimate.
one at closing. It had changed by like $80-something. She goes, I can't figure this out where the change came in. Can you? This is an attorney that does this for a living.
But that's where you had to hang up the phone. I'll call you back because you had to go to your closing department to figure it out, right? Because looking through that thing is
Yeah.
pile that right next to all those books about guidelines and stuff
I'm
like that.
telling you, it's a mess.
So that's
it's
what
still
your
a
father
mess.
says. when he
That was
in insurance.
yesterday.
But that's like what you said your father is. He got in, whenever the government got involved.
Yeah, they just screwed up something so easy and made it so difficult.
It's almost let's get us back to the George Bailey. We're not evil people we're not evil people. If we can make it easier for our client, the free market is an amazing thing. It works. If I'm good at my job, people will come back to
Yeah.
me if I make it easy
Yeah.
for them. If I'm ripping people off, all those people who are in subprime lenders, they're out of the industry.
They're gone.
The industry attracted a certain type of people, they're gone.
Yeah.
But if we're good at our job, but somehow people like us who are left standing we must be evil. So you must be monitored at every step of the way.
Yeah.
So now part of the process is call me. Here's the loan estimate. I'll walk you through it if you have 25 minutes or so,
Yeah.
rather than here's the one-page good faith.
Yeah.
Really, really simple. So that was and then they came in, they created the CFPB, Consumer Financial Protection Body or Board or what have you.
Yeah.
And it's an interesting thing. They monitor how much we can make now on a loan.
Yeah.
This is the fascinating.
No other industry, right?
No,
No doctors, no car salesman, nothing.
First time in American history that you have to make. But the irony is that it benefit the consumer.
Yeah.
Because no.
Right.
It
And now it's
benefit-
worse. Now the consumer's paying more.
Because of the government, like what your father
Well,
said.
think of all the compliance too that we have to pay that just gets built into the interest rates.
That interest rate, because
Thank you, Dodd-Frank, for making it worse for the consumer. Now I'm on my soapbox.
Yeah, but that has to be important. That's an important thing, because people like you and I, when we talk about, like I was mentioning how the new type of loan officer, because the market was becoming very volatile and rates were becoming very aggressive, Barry and I would look at our businesses. I want that loan because it's a foundation. My business can keep growing. I always said my business is like a tree. A new referral is a branch, and I need more branches to grow to that. The old timers would look at us and say, you're not making enough money on your loans. You remember being there,
I
you're not
do.
making enough. We were like, I just want my business to keep growing.
Yeah.
So we were the ones, I wouldn't say undercutting the market, but we'd say, I'm not counting what I make. I'm not working for nothing, but that's enough where I can keep that business going. And and so we were the new type of aggressive type people. So who benefited from the way we would price a loan? We're not charging points.
Right.
Who benefited?
Right.
The customer.
Right.
They came in and said, okay, you have to make a certain amount. Well, no one's going to, you have to set your standard that
Right.
you're going to make.
It's
Customer
stupid.
pays more.
Right.
The back end compliance, all that is the form of higher rates. So I'm a big advocate of the free market. Barry and I are a testament to that. It's how we've grown our business.
You know what else bugs me? Sorry to cut you off.
No, I want you to.
In the olden days, before 2008, you did not have to get a condo approved. If you were buying a condo, all right.
That's right.
We never had to check on
Yeah.
reserves and HOA and anything like that. And I get it.
Mm-hmm.
I get the fact that the consumer does want to be protected.
Correct.
Right?
Right.
But it's created in every single bank and mortgage broker a department
It gets more
that
stringent.
that gets more. I mean, and then when that building collapsed in Miami a couple of years ago, now their knee-jerk reaction.
But what does that
now
have to
it's-
do with Chicago and stuff, right?
Right.
That's the thing. But
Right.
But because now the government came in, they made it, like, who benefited from that? I remember the big banks, because they can afford to stay in. And there was plenty of smaller banks. They made it too stringent. So you saw some big companies, like, remember, just saying, we're not going to be in the mortgage business because it's too expensive. So there goes the competition.
Right.
Astoria, remember a big,
Yes.
we're done.
Yeah.
A great
Yeah.
portfolio lender out of
Great.
New York with great products.
No, like,
They
it's just
looked at-
not worth it.
It's not worth it anymore.
Right.
We're not worth it to lend anymore. So you're not helping anyone by making
Right.
that stringent, like you said in the condos. These were banks that were outside the guidelines of the agencies and would take their own common sense approach. So the big banks benefited, the Chases, the Wells, and it became one big conglomerate. And I don't know how that benefited anyone. Like you said, it's a little frustrating, like how the industry's progressed that way. Although we've still found ways to survive, though. That's the thing. So
Yeah.
when we talk about compliance, so we're the ones left standing because all those banks were gone, all those type of loan officers were gone. So they looked at us, we're going to monitor what you make. We're going to monitor everything you do. But it's being monitored by people who didn't understand the industry. Because if you
Well,
look at
that's the worst part.
Because
Right. I don't think they consulted one person in the industry.
Right.
I really don't.
Right. But what is the loan estimate? It was just overthinking something.
Yeah.
It's like, it's 3 pages, and I tell a client, ignore page 1, ignore page 2, 3, 4, and 5. Let's go to the second page, and I'll walk you through it.
You know what my favorite is? Loan services you can shop for. Well, no, you can't.
Yeah, you can't. Yeah, good luck.
But don't consult anyone in Illinois, though.
Good luck. Yeah,
Yeah.
loan service you can shop for. Good luck with that. It's just confusing, is what
Yeah.
it is, type of thing. And I get that. If you're successful, you're successful because you're providing good customer service. It's the problem. Yeah. Okay, we'll move on there. All right. So that was what happened. But I think so we talked about how you and I survived. In that industry, there was people like us whose volume started increasing. There was a little type of, how do you handle someone like that? The industry kind of changed, really, basically saying operations has to now accommodate us rather than this clash of ops, because different type of personalities, where the perception of people like us changed. When competition was, other companies competing, saying we're going to offer you this, offer you that. we didn't become the bad guys within the industry
Right,
anymore.
right.
Here's a team to help you support your business. Because what other industry, Barry? Okay, you're bringing in the business and you have to process that business. You have to do that. We're good at selling. We're good at knowing our product, but doing the detailed stuff. So I think that changed, and it benefited us. I think,
Yeah.
and all that. It changed. The industry
Yeah,
changed. So-
agreed.
and we were able to, and that changed a lot. I'd say in the the 2000s to the 2000s. What are the 20 teens? Is that what you call them? The
Sure.
20 teens. That's when things sort of changed. But I think we benefited because interest rates. What is it? Every 2.5, 3 years, there was a refi boom, right?
It seemed like every 3 years.
Right. And so you didn't care if the rates went up. You said these are just future clients.
Right.
Right. Because
Right.
that was the thing. So I noticed, in March of 2022 is when I was at a different company, and I think you were making a move too.
Yeah, yeah.
And I think you and I were at the two biggest companies
Yes.
in the country, right?
Yes.
And going head to head. But I think what happened, because everything was so stringent, the benefit of those big companies is gone. They didn't do anything wrong. I remember when I left, it just scratched my head. They had because they were so well funded, they had such a good competitive advantage. The way the industry is so on the back end, they're selling the same product. I just thought, I was telling my wife who owns A&N, I said, you're going to start growing, and that's exactly what happened, organically, that you're going to get people who want their own identity again, and I think that's what happened in the industry.
That's exactly what happened.
Right, because I don't say...
And like I said, they didn't do anything wrong.
No, nothing.
They the companies we were at took good care of us.
Very good care of
right?
us,
But
right, yeah.
just to grow,
Yeah,
we had to come here.
right.
Right?
Because you
You
it's
become
expensive.
part of this little cog in a huge
Right.
machine. It's just,
Yeah, and it was like
Not
I
our-
said, I remember when I left, nothing's changed. The market changed.
yeah.
So if all I'm selling is a 30 fish and it's expensive, and there's so much overhead with that,
Yeah.
I can do that. I can scale that, and
Yeah.
I can create my own identity again.
Yeah.
Type of thing. Nothing that I lost an identity, but you're seeing that all around the industry, and competition's a good thing.
Yeah.
Who knows if it'll happen in real estate too? Because I mean, you remember back in the 2000s, there were so many different real estate companies, and there's a big conglomeration. I think that might be the next big thing. Is the agents might want to start getting their own identity
Yeah.
also, type of thing.
Yeah.
So that's the change we saw in the industry. And then let's go back before we moved here is COVID. What happened with COVID? Like that was a whole nother world type of thing. And we talked about earlier about interest rates. When there's adverse times, unknown, what happens? Rates tank.
And this goes back to what I said. I mean, besides the sickness and death, COVID was fantastic.
It was unbelievable.
Because
It was unbelievable.
It was just, I think I made more money
Ever.
those 2 years.
Everyone did.
Yeah,
Ever.
it was insane.
It was insane because it's just, you couldn't keep up. I look back
You could not keep up.
how much more I could have done. If I did,
Yes,
if I had this really good year, I
yes.
did this much. I'm thinking, oh,
Yeah.
just give me, it's like,
Yeah, we still
two
left
more
money
minutes
on
on
the
the
table.
clock. Two more
Yeah.
minutes on the clock. I can get that much more, please. All right.
Oh, my wife and kids hated me because I never worked so hard.
Hard. You
Just-
had to, though.
You had to.
Going over and over again because the phone, you're selling at 3% rate. But I'll never forget is you still get rate shoppers. And I had
I
a
know.
client, he was self-employed. I'd done his loan.
Yeah.
And I go, can you just send in information? And the reason I say self-employed is they're harder to do because
Yeah,
you have to analyze
yeah,
their income. I
yeah.
go, just start the process. We can
Yeah.
wait for the rate.
Yeah.
I offered him a no cost at 3%. He was going to wait. 3%. He wanted to wait. I mean,
I know.
wait.
Can
what?
I do a public service announcement to all the waiters out there?
Yeah.
Because just rates were great in September. And people were like, no, we're going to wait. They're going to drop more. And then they went up. Even though the Fed lowered,
Yeah.
they're higher.
And
They've gone up quite a
And
bit.
since December 9th, they've been going up again, too. The
Yeah.
Fed's meeting tomorrow, and it's one of those type, I hate it now when we're in the sevens again, and you have clients that you've been working with who've been waiting,
Yeah.
and you're the bearer of that bad news.
Yeah.
And it's like, oh, that's what's happening.
Yeah.
I never understood the waiting for the rate. I never understood that, especially working with
It's
people
so
like you and I.
hard to get the
Right.
bottom. Right? It's just take it. You could always refinance again.
That's
my
the key.
That's my PSA.
But think of the people like you and I. I mean, we live for stuff like
Yeah.
that. Like, let's
Yeah.
say you have someone who has a $400,000 loan, and the best they can get in September was 6.75. If April 6.5 comes around, you're reaching out to them.
Yes.
Say, here's 6.5. If I can do this for no
You're
cost, let's
saving
do that.
$150 a month.
But
Just
why are
do
we
it.
doing that? Because it's money for us. It's in our best interest.
Yeah.
The free market works. It's not like
Yes,
yeah.
yes.
So that's the thing. Is just take it. Don't wait. If you want to buy it, you're talking to
Yeah.
me. Buy. Yeah.
Yeah.
Great public service announcement.
Thank you.
So, yeah.
I'm here all week.
You're here all week. So in COVID, the challenge with COVID is the government printed $5 trillion of money. I always wondered when they just printed money, I go, why do we need income tax if you can just
Yeah.
print money then, right?
Yeah, why don't
If
they
you
just
can
keep
print money?
printing?
Why do
Yeah.
you just, I remember the concept was, because remember all the people were out of jobs. They
Yeah.
couldn't do anything. And they wanted to talk about eliminating the income tax. I go, what a great idea, because these people can't live.
Right.
Well, of course, you saw the politicians, absolutely not. We'll give you $600.
Yeah, yeah.
Oh boy, that took them $600.
helps.
Yeah,
Yeah.
right. But they wouldn't eliminate income tax. But you still will give you $600.
Yeah.
But you
Yeah.
realize the whole different scheme working out there, like something that would actually help. So,
Yeah.
but they're just printing money, and that's why rates were so low. The challenge in the past few years has been inflation. I don't think the interest rates are a big deal.
No.
Because as we mentioned, what was it? What rate did you get on your first house?
It was 8 3/4.
Right, 8 3/4.
Yeah,
then
and we were ecstatic that it was below 9.
But the economy was good back then. So I
Yeah.
don't think rates are the big issue. It's just that inflation's been a challenge. So we'll see where that goes.
It'll come down.
The industry change. But the good thing is, that's the history of us in the industry, and we're still here. The difference of the way we work is, I don't really do the rate sheets and donuts, but we have teams now. I think that we're branded ourselves.
We have teams, we
Yeah.
brand it. It's
Right.
it's very efficient.
But Barry does his videos and his newsletters. Where can they find all your information? We could put that up, right?
Yeah, we can put it up.
Yeah, we can put that up. So something you want to check, we'll
Yeah.
put our stuff up.
It's usually Hey Mortgage Fans.
Hey Mortgage Fans, that's what it was. Barry had the Hey Mortgage Fans
yeah.
and all that.
What about you?
But I think, I have the deanvlamis.com, but I remember going back to the marketing. Half the ideas we got is because you and I are kind of the same age and we grew up in the 70s. And goodness, all the Saturday morning cartoons and how our lives were similar. They were glued around certain things.
Yeah,
and
yeah.
The same TV shows type
Yeah.
of thing. So I'll make a joke, can't come in, there's a rerun of Beverly Hillbillies coming on. So, shows that no one would know about, but we lived on reruns back then, right?
The best,
So,
yeah.
I started watching that again recently, and my wife's like, what are you doing? I go, do you realize how funny Granny and Jethro are? How hysterically stupid the show is? And she's like, what are you doing? I go, you just got to watch this. Yeah. So
Yeah.
Jethro Bodine's got a third grade education. Excuse me. I got a kid.
So great.
And then she caught me watching Leave It to Beaver, the early ones when he's still a young kid.
I watch it every morning.
Right?
Yeah.
It's refreshing, I think, because everything's so harsh in this environment,
Yeah.
right? Everything.
Yeah.
Can I just have a little innocence?
Yes.
A little innocence.
Yes.
Yeah. Take me back to Overland Park, Kansas, in the 70s, and playing Ghost in the Graveyard at night, stuff like that. So, before I would lock myself up in my room and watch Wonder Woman or the Dukes of Hazzard. Go figure. So, I think that covers everything we want to talk about.
This was good stuff.
Our history in the industry, right?
Yeah.
So, like I said, interesting times. 2020, I would say 2023 was the worst year ever we've had.
The worst.
2024 was way better, but still the second worst.
Right.
Promising.
2025 is going to be a good year.
That's going to be a good year. We get back. to
Buckle
it.
up. It's going to be
Buckle up.
It's going to be a busy year.
So I think that's it. Our episode 1, real estate happy hour, we called it, right?
Okay, Real Estate Happy Hour. We'll see you for episode 2.
There we go. Cheers.
Cheers. That was good, Dino.
Not bad, right?
Yeah, flow.